Good morning and welcome back to the Camarda Wealth Channel. I am your host, Troy Lerche, bringing you the Week in Wealth. Last week, we had an interesting week in the markets, and I'll discuss a little bit more about those in coming up. We always like to start with our CAPE indicator and where it is. Our CAPE indicator dropped this week to 36.95, which is down from 37.67 last week. However, we do remain in cyclical bull territory at this time, but we did have a change in our indicators. One of our indicators actually turned red. So the sum of our other indicators that are green are 3 out of 4. So we're monitoring that situation closely. In the U.S. markets, we did major U.S. stock benchmarks finished down across the board pretty solidly for the week. The Dow Jones declined over 1,000 points to 33,290, which was a decline of 3.5%. The technology NASDAQ only was pretty resilient and only lost 0.3%. And by market cap, large caps did best overall against mid caps and small caps by losing 1.9%, while mid caps lost 5.1 and small caps lost 4.2. In international markets, all but one major indice finished down the week in the red. The Japan's Nikkei bucked the trend and managed an increase of 0.05%. So basically flat. Developed markets finished down 3.1, while emerging markets declined 1.9%. In commodities, precious metals ended down for the week. Gold retreated 5.9%, while silver gave up 7.7% per ounce. Energy managed to finish the week off with a modest gain, which West Texas Intermediate crude is a good measure of that. It gained 0.5% to 71.29 per barrel. The industrial metal copper, viewed by some analysts as a barometer of the global economy or global economic health because of its variety of uses, plunged 8.4%. So we're watching that as well. In U.S. economic news, the number of Americans filing for first-time unemployment benefits unexpectedly rose last week to the highest level in a month. Jobless claims filings have been trending lower since February as the economy has been recovering from the pandemic. The National Association of Home Builders, or NAHB, reported high lumber prices, labor shortages, and other barriers are beginning to sap the enthusiasm of home buyers. A survey of builders shows they are still very confident their business will improve, but they are not as optimistic as they were at the end of last year. The NAHB monthly confidence index slipped to 81 in June from 83 in May, its lowest in 9 months. Confidence took a large hit in the early stages of the pandemic as sales briefly nosedived. Yet record low mortgage rates and the end of a nationwide lockdown led to an explosion of demand among home buyers. Despite the recent fall in the price of lumber, prices remain much higher than they were a year ago. NAHB chairman states in its release, quote, "These higher costs have moved some new homes beyond the budget of prospective buyers, which has slowed the strong pace of home building." The Census Bureau, which reported new construction of single-family houses, increased a solid 4.2% in May to a 1.1 million annualized rate. But an indicator of future building activity permits for future home construction declined again. So permits has declined again, and they've fallen almost 11% from a 15-year high in January. Sales at U.S. retails fell sharply last month, suggesting the U.S. is no longer getting a big boost from the massive federal fiscal stimulus. The Census Department reported sales in the U.S. retail sank 1.3% in May. Economists had only expected a decline of 0.7%. Sales were held down by fewer purchases of new cars and trucks. Automakers have been unable to keep up with the demand as major global shortage of computer chips has restricted production. And as you guys know, we've talked about it many weeks now. If you are in the market for a car, you may want to call your local dealership and find out if they have it, because the times of right now going to the dealership and being able to pick whatever trim level you want and whatever color is almost non-existent. I stopped at a couple dealerships this last weekend for my wife, and they just to I had some extra time, and not a single dealership had one of the cars my wife wanted on the lot. So it was pretty amazing, and it was a very quick trip, which is unheard of when you stop at the car dealership. But if autos are excluded from this number, retail sales fell a smaller 0.7% in May. Moving on to prices of wholesale level jumped again in May for the 5th consecutive time, which is a sign that inflationary pressures tied to the reopening of the U.S. economy and federal stimulus are likely to persist through the summer. The Bureau of Labor Statistics reported its PPI index, or producer price index, rose 0.8% last month, which exceeded forecasts by 0.3%. The annual increase in the core rate over the past 12 months is up 5.3%. The cost of imported goods climbed again in May and contributed to the biggest flare-up in U.S. inflation in more than a decade. The flare-up, the Federal Reserve insists, is transitory. The Federal Reserve, acknowledging inflation may continue to increase, said it might hike interest rates earlier than previously expected. In its latest statement, the Fed is now anticipating 2 rate hikes in 2023. The Fed repeated its belief that inflation would be transitory, but Federal Reserve Chairman Jerome Powell stressed he and his colleagues were in agreement that inflation could rise faster and last longer than expected. The Fed forecast that inflation would move up 3% annual rate this year, but then would drop sharply in 2022. In an outcome that was more hawkish than expected, the Fed's dot plot chart showed 11 of 18 officials expected at least 2 rate hikes in 2023, which in March, only 7 expected even 1 rate hike. So that's a big change. Furthermore, Powell announced that the Fed held its first discussion of slowing down its bond purchasing. So we'll watch that closely as well. In Europe's mainland, there was optimism in France. The Bank of France anticipates the French economy will return to pre-pandemic output at the start of 2022, as the lifting restrictions and acceleration of vaccines fueled a stronger than previously expected rebound in the second half of this year. The central bank raised its 2021 growth forecast to 5.8% from 5.4% in March, as it sees strong spending and investment to help the French economy outpace the euro area average. However, the sentiment in Germany wasn't as optimistic. In its latest forecast, Germany IFO Institute forecasted Germany's economy will grow by a weaker than expected 3.3% this year. This year's supply bottlenecks in manufacturing hold back industrial output. The lower growth forecast in Europe's largest economy represents a cut by 0.4 percentage points compared to its previous estimate in March, IFO said. From 2022, the Institute raised its GDP growth forecast to 4.3 from 3.2 previously. Japan's government will include a pledge to achieve a safe and secure Tokyo Olympic Games this summer in its economic blueprint. According to the final draft of the document, the final draft came days after Prime Minister said he won support at the G7 summit meeting in Britain for holding the Olympics, despite public concerns that the sports extravaganza could worsen the spread of the coronavirus infections. He said, "We will realize the safe and secure games while creating various legacies," the draft said. The government will also clarify its resolve to complete its vaccination program by the end of November. Japan remains well behind other developed nations when it comes to coronavirus vaccinations, where just 6% of Japan's population has been fully vaccinated. And finally, during the recent London G7 meetings, the United States top diplomat, Secretary of State Anthony Blinken, rejects questions claiming the U.S. is entering a quote-unquote Cold War with China. The questions are not out of line with public opinion, however, as revealed in a recent poll. Global public opinion and data company YouGov showed that in their 2017 poll, just 10% of respondents polled identified China as an enemy of the US, whereas today the number is closer to 35% and is the most selected choice, followed by unfriendly. So that's all for today. We hope everybody had a nice weekend celebrating Father's Day. We look forward to another great week. Take care and talk to you soon.